All right. Good morning, everybody. We're super excited to have Ryan Prestwich on our podcast this morning. Uh, Ryan and I've done some work together in the past. He's a branch manager of a Veteran First Mortgage branch out in the Norfolk, Virginia Beach market. He definitely knows VA loans. He's worked with a lot of veterans. And so we're super excited to have him on. And so good morning to you, Ryan.
Hey, good morning to you.
So appreciate your time, appreciate the opportunity to kind of talk to you a little bit. I mean, one of the things we market out here is kind of the insider secrets of buying a home, and it's geared towards veterans. We talk a lot about VA loans, where we're glad to have you because we know that you're kind of a go-to guy for VA loans, especially in the Virginia market.
Yeah, just to give a little bit of my background, I got into mortgage loans back in 2004. And the funny thing is I graduated from college with an English degree, and it was one of those things where everybody's like, what are you going to do with that? And that was a good question. I didn't really know, I just knew I liked communicating, I liked writing, I liked reading, and I had friends that actually worked for this company way back then, and I ended up getting into it, and I found it was a perfect fit, because this job's a lot about communication and knowledge,
Right.
and being able to help people understand what's going on. So I found it's translated pretty good to what I do now.
Nice, nice. Yeah, I mean, much of what we do in the real estate and in the mortgage business is really talking to clients, communicating, finding out what their needs are, and being a good listener. So yeah, I'm sure that helps out a
Yeah.
lot. I mean,
Yep.
and you've been with a great company. We do a lot of work with Veterans First Mortgage, and they really know the VA loan business. You've had the opportunity now to open a branch for them in the Norfolk, Virginia Beach area.
Yeah, that's right. What's interesting is because I've been with the company for so long, we were kind of traditionally, up until this Virginia Beach branch, we were traditionally call center based, which basically meant that people would see our digital advertising online. And we're successful with that. I mean, last year I was looking at the VA kind of ranks out the number of loans and volume that are VA, and we're in the
Right.
top 30 in that. So, what we really wanted to do is we wanted to get closer to the veteran. So instead of having it be kind of this call center, you communicate over the phone thing, we actually wanted to get into the veteran communities. We looked at a whole bunch of different communities, which we still want to get into, but Virginia Beach was a good match for us because it's on the East Coast. We're kind of, we have a place in Salt Lake City, Utah. We've got one in San Diego, and it was just a good match for us to come out into the Virginia Beach area. So it's been good.
Yeah. Yeah.
And
Awesome.
then, yeah, it's allowed me to, interface with the veterans face to face rather than primarily over the phone, and it's been very rewarding so far.
Nice. Well, if anybody listening needs to get a hold of Ryan, probably the best entry point is go to www veteran or I'm sorry, vrevnetwork.com. So that's www.vrevnetwork.com. If you hit that website and you fill out just a basic form, then it's essentially the lending side will eventually work its way back to Ryan in that Virginia market. So if you're trying to get in touch with them, that's a great way to do it. Since we have you on this, we'd love to hear any kind of insider information you got on VA loans. It's recently they've changed the limits on the VA loans, so you can buy a lot more house. But any kind of
Right.
insider information or pros and cons that you see on the loans?
Yeah, there's a lot.
Oh yeah.
Just to kind of reference what you were just saying, I mean, because we're in the San Diego area, we're actually looking at an office in Coronado. We're working on opening one there, and as you can imagine, the prices have gone way up in Coronado. I was actually talking to a guy who's a Navy SEAL here local, and he has friends in Coronado, and he's talking about how in Coronado. He has friends that bought in the 350 range, and it's like the entry price there is 1.2 million right now. So yeah, it is crazy. But if you want to, there are a lot of veterans on Coronado, and there are no limits on the VA loans. So we have people doing $3.5 million VA loans, 100% financing. I mean, you have to qualify for your loan. You have to have the income to be able to make the payment, but it's definitely possible. A lot of people don't know that.
Yeah.
So yeah.
I mean, it really is an amazing product, and we push this information out to veterans all the time. I mean, a lot of veterans can't buy a $2 and $3 million home, but a lot do. But imagine, it's probably the only loan product out there in the nation where you can put no money down on a $3 million house, have no mortgage insurance, as long as you qualify for it, and you're still getting a decent rate. It's pretty incredible loan product for most of the people to see. One of the things we like to push out there is VA loans is no down payment, but doesn't mean no money. So that's a common misunderstanding. Veterans think that, well, because it's no down payment, they need to come up with $0 to get into a house.
That's right. I think you hit the nail on the head. I mean, if I were to point out some of the major pros of the VA loan, it's that 100% financing feature with no mortgage insurance. And I think there's a kind of a misconception I found, it's that the VA is actually lending the money, but it's actually a lender that lends the money. So the way it works is the VA guarantees 25% of that loan should the worst case happen, which is foreclosure, to the lender. And if you think about it, from this perspective, there's this whole like, well, isn't a conventional loan with 20% down better? And from a lending standpoint, I would say no, because if you have a veteran who does 100% financing on a property and the lender is guaranteed 25% should the worst happen, that's actually a safer proposition than a conventional loan with 20% down and the same outcome if there was a foreclosure. So from a lending standpoint, lenders are all about it, so it's a lower risk than a 20% down conventional in many cases.
That's a good point. It's a good point. I mean, it's definitely a great product. It's a no money down product when it comes to down payment, but as Ryan, but a lot of our guests don't know, is that there are other components to purchasing a home, and we call those closing costs and prepaids. Typically, on a VA loan, we kind of estimate about a 2% factor for closing costs and prepaids, and so we're very successful in getting the sellers to help contribute towards that.
That's right.
But we like to let veterans know that there is some cash out of the pocket.
Yeah, I mean, if I usually tell most veterans, if we can get sellers to pay the closing costs, which that's actually happening, believe it or not, we're in a seller's market. I just had a veteran, he's closing here in a couple of days. We were able to get the seller to pay the closing costs. He's got the only money he was really out of pocket was the appraisal, which is $600. And then you got to put some earnest money up, which you could potentially get back if there's enough credit there. But you're looking at a minimum of about $1,000 if the seller pays your closing costs, and if not, then you're looking at that 2% range. But still, I mean, if you compare that to any other option out there, it's way better, because once you hit the financing on any of those other options, if you're trying to do a minimum down payment sort of situation, you have to make a little bit of a down payment and still pay those closing costs. And then you have mortgage insurance. So it's definitely better than your alternative options. I think another thing to throw in there, VA can go higher on your debt to income because they take into account what's called residual income. So it's a secondary calculation they do on the back end that takes in the debts, the income, but they look at family size utility costs. And you'd think maybe that would make it worse, but in fact, it actually makes it better. So veterans are able to, qualify for a little more house than most people on your more traditional products. I call them civilian products.
Yeah. That's a
And
good
then,
point. Yeah.
yeah. And then another thing is that with the VA loan, they have, because veterans move around a lot. And the military isn't really in the habit of saying, hey, what's the interest rate? Should we move this guy or gal? They just, it's like, you're moving,
Yeah, yeah, exactly.
and if the rates are high, the rates are high. And if you have a family, you need to buy, and we're kind of seeing this right now. The market's a little higher than it's been in the last couple of years during COVID. It does have a built-in feature that they call the interest rate reduction loan. Or you'll often hear Earl mentioned. But what's nice about that is that if rates do go down, the VA does have a net tangible benefit calculation they require. But as long as it shows benefit to the veteran, you can lower your rate without any of the inspections. They don't look at the income. The way the bank looks at it, it's like, we already carry the risk on this. So it's kind of a win-win. You get a lower rate, a lower payment, and we lower our risk because we're already carrying the loan. So that's a really cool benefit that, conventional loan, it's like, do the whole kit and caboodle, right?
Yeah.
Appraisal, income, credit checks, all of it, you
Right.
get to avoid all those things.
Yeah, it's a good point. I'm glad you brought that up, because in today's market, what we're definitely seeing is the selling inventory starting to pick up. So the amount of houses available for a buyer to look at has increased. I mean, it's increased pretty good amount in a short period of time. The biggest constraint right now is mortgage rates. I mean, everybody hears mortgage rates, but 15 years ago, a 6% rate was golden, but we
Right.
just came out
That's
of
right.
2.5% error. And so everyone's, but even if you get in the market now, which is not a bad time to do it, and you get in at 6%, like you just talked about, and the market adjusts for all kinds of reasons, and we get back down in the fours again, you can do an Earl. There's probably going to be a net gain in the veteran. You can do a quick Earl, and you can reduce your house payment. So it's not a bad time to jump into the market.
It's not. I would argue that, if rates go down, say they're in that 4% range next year, what's going to happen is you're going to have more buyers come back into the market than there are right now. So your competition increases. And if you have that Earl in your back pocket, you can still get that market rate next year and have less competition on a property this year. So my opinion is that now is actually a really good time to look around, because you're not competing with as many buyers.
Yeah, I agree. And a quick statistic is that we closed a couple thousand houses last year in the VREB network, and statistically, 85% of our buyers got seller concessions. So translated, 85% of our transactions, the buyer got money from the seller to pay towards closing costs. Now, if the scenario like Ryan's talking about, market changes and the market gets flooded with buyers, which it will, if it drops down to 4%, everybody in the world that can buy is going to jump in the market. And guess what the seller is going to do? They're going to back up and go, you know what? I've got what you want. I'm not going to give you anything. So
That's
in
right.
today's market, 85% of thousands of buyers got money from the seller. Like Ryan talked about, a lot of them are getting all their closing costs paid. And with no down payment and your closing costs paid, you can't even rent a house for what we're selling them
That's
for.
right. That's right.
So I think those are all great points.
Yeah, I mean, rents are going up like crazy along with everything else. And I have a lot of people approaching to buy because rents are so high. And when they hear the mortgage payment, they're like, man, that's like way cheaper than what I'm paying in rent. And then they can get the equity gains. So, it's definitely a good time to look at buying because of a lot of those factors.
Right.
Rents being one of them. They're expensive right now.
Yeah. So I'm going to remind everybody, I mean, Ryan knows VA loans. You can tell by just the whole discussion here. And to reach him, you can reach us at vrebnetwork.com. Again, that's www.vrebnetwork.com. If you come to our website, it's a quick form that you fill out. And if you don't have a lender, or even if you do have a lender, it's worth having Ryan take a look at your loan and say, you know what, can I meet or beat what you currently got? A lot of times he can do that. He can give you a better rate, or their lender fees are very, very competitive. So give them a chance to shop it. At the end of the day, the loan's a loan. I mean, as long as you bring green to closing,
We're willing, yeah, we're
you
willing to
know,
match. I mean, if you have a loan estimate out there, we're willing to match. And then, I will say, I think this is kind of relevant here because we talked a lot about the pros. I think the cons, if you want to cover a cons, I don't think there's a lot of cons to the VA loan, but I think one of the things about it is it is a unique loan. And, what's unique about us and our company is we're like if you looked at the percentage of product that we close, we're at like Veterans First specific is at 90%. We're like 90% of what we're doing is VA.
yeah,
I've actually inquired among competitors. I've met some owners of companies out here, and as you can imagine, they do a lot of VA loans too because they're here local. But I found out that the highest top end percentage of product that they close is 40% VA loan. So, and that's in a heavily veteran area, right? So, they're doing 40%, we're doing 90%. I think what happens out there is there's kind of you're going to hear the rumors. VA's tough, VA's this, VA's that. You're going to hear it from agents. You're going to even hear
right.
it from loan officers out there. And I think the reason for that is actually the misunderstanding of the process of the VA loan, because the VA loan can be extremely simple if you have somebody that knows how to do it.
Exactly.
So that I think that's one of the big benefits. It's like you could try to do the VA loan, you can call all kinds of lenders, every one of them are going to say I could do it, but when it comes to the experience level, that is critical to how smooth it goes, the success.
Yeah.
And you're going to have people try to steer you away from it. I promise you. So and that's a tragedy because of all the benefits that we just discussed, right?
Right.
So
exactly.
matter of fact, I think the only time it doesn't make sense to do a VA loan is because VA has what's called a VA funding fee. If you have 20% to put down and you have to pay the VA funding fee, it might make sense to go conventional, but in a lot of cases, even then you lose that interest rate reduction feature down the road. It's something to consider. The only way to avoid the VA funding fee is if you have a 10% or higher service connected disability, the VA will waive that.
Right.
So for that veteran in that category, always do VA.
Oh yeah, no, I completely agree. And to jump on what Ryan's just talking about is a lot of agents don't understand VA loans, and they're scared of it because they don't understand it. And so they're going to try to talk you into FHA or conventional because they know that world. And they're going to use excuses like the VA inspections are tough, the appraisals are tough. They're going to give you all this smoke screen
property
for you to
requirements.
jump over. So come to VREV Network. I mean, our agents have to take a special course so they understand VA loans, and they have to understand how to work with veterans. And our agents don't steer veterans away from VA loans because they understand them and they know that it's a benefit that you've gotten by serving our country. So don't let an agent talk you out of it unless you talk to an agent that really understands them. There are very unique circumstances. If you're trying to buy a fixer-upper house, a VA loan's probably not going to work. You might have to go conventional, but there's 95% of the time the VA loan's going to work. It's going to work very well, and it takes somebody like Ryan that understands how to get the loan processed and closed, because everybody swears they're a friggin' VA loan specialist. Everybody on the internet, I'm a specialist in VA loans, but they may be closed 2 in the last 2 years. That doesn't make
that's exactly right. Or even 40% of what they do.
Right.
That's a big swing.
Yeah.
So in addition to being able to reach me and my particular branch of Veterans First through Eric here and VREB, I can be found on Google Maps. If you just jump on Google Maps, we are actually bank owned, so we do loans in all 50 states, and a lot of East Coast people enjoy working with me because I'm on the East Coast with our company. So you can find me, and then I have reviews there too. And cross my fingers. I got all 5 stars so far.
Oh
So
man, that's it's great for that one review you got. No.
yeah, that one.
So I will tell you that Ryan's closed a lot of our deals. We've worked together on transactions, and his reviews are off the charts. And so I'm teasing about the one review, but his reviews are off the charts. He does an amazing job. He understands the VA loan program. So even if you're working with a lender, it's not a bad idea to let Ryan take a look at your loan estimate and say, you know what, that's a great deal, or that's not a great deal, or let me kind of take a look at this, because every loan is different. Every loan has its challenges. But he understands them. So Ryan, I appreciate your time, and I always appreciate working with you. Some of our top agents on the East Coast work with Ryan. One is Eric Gardner out of the Norfolk market. Eric Gardner's with Remax Alliance. And I'll tell you what, if you're shopping for a home in Norfolk, Virginia Beach, Chesapeake, he's the guy to go to. I mean, he closes a lot of VA deals. He's a retired Navy captain. I'm just giving him a plug right now because he does an amazing job out there. And him and Ryan kind of work together. And if you're buying a house, you got Eric Gardner and Ryan on your team. You know what? At that point, you can call the movers, because it's pretty much a done deal. So Ryan, I appreciate your time on this podcast. I look forward to working with you in the future. Any kind of last minute thoughts?
No, I appreciate the opportunity to get some of this information out there, because a lot of what I said, in our conversation here, is a lot of the stuff that I encounter on a day-to-day basis. So it's a great means to get information out there to you guys, so you can, make decisions and use that VA benefit.
Yeah. There, you got to use it, and it's not a one-time use. You can keep reusing it and reusing it. You're not going to wear it out. As long as you handle it the right way, you sell your last house and you pay your mortgage, you can keep using that benefit over and over and over. So again, Ryan, I appreciate your time. I appreciate your expertise on this call, and hopefully it gets information out to the veterans, because at the end of the day, that's what this is all about. Trying to help veterans use their VA loans, make the home buying process easier, save them some money in the process. And then through VREV, then we give them a rewards check after closing. The average check's about $1,600. And that's real money that gets sent to the veteran after closing. It's not a gift card. It's not a change in a sales price. I mean, it's real money that gets sent to them. Last year, VREV sent about $1 million out to veterans. So we want to continue that kind of flow. So our mission really is to make that process easier and work with guys like Ryan to make the loans work. So Ryan, again, I appreciate it. Look forward to working with you in the future, buddy.
Yeah, you bet. Thank you, Eric.
All right. Thanks. Take care.
You too.